Dear Mr. Tischhauser, thank you very much for being here at SensAbility this year. Who are you and what do you do?
Well, I'm basically a banker. I'm the co-founder and CEO of Responsibility Investments. And as the CEO, I do what the CEO does. And as a company, we invest in developing countries, in sectors that are relevant for development. So basically, we try to identify business models that benefit through products and services poor people, low-income people, and small and very small and medium-sized enterprises.
What has motivated you to start the business and how did it all start?
Well, probably I've got something in my DNA. That's okay. One thing. And but just prior to founding Responsibility, I had done a cycling trip through Africa from Zurich to Cape Town. And of course, during such a trip, you see a lot of interesting things, but you see, particularly in Africa, also a lot of poverty. But I felt that there's also a lot of entrepreneurial energy, a lot of lack in infrastructure that would help people, if it was there, to promote much more quickly and develop. And that actually, when I came back with my financial background, I said I would like to do something against that and use my background to do that.
And what has changed in the public perception of impact investing? What Responsibility is doing?
Well, when I started about a bit more than 10 years ago, that term impact investment wasn't around, or at least I wasn't aware of that. Ever since, what has changed, I believe, is that the public perception that with investments that are targeted at development-related activities, you can actually change a lot. You can contribute really to generating impact, and that there is that it is not only okay, for instance, to do business with poor people, but that it is actually a very, very powerful tool. Obviously, microfinance is the industry that has spearheaded that over the last few decades. But now other sectors are following suit, and I think that's a big hope, and that is has changed and is still changing.
And if therefore, like impact investing, what does make the difference from Responsibility to other asset managers, or are like any other factors? Would you say that you differentiate from other competitors in in the normal business sector?
Well, we are, as you're saying, we are an asset manager. Of course, there's a lot of different shapes in asset management, and we are a specialized asset manager. We've got that geographical specialization, which is developing countries, which is already relatively difficult because it's not the BRIC, it's really frontier markets. And within that, not the big businesses that are already up and running, but difficult things that have the potential to grow. And so this, of course, is quite a difference because most people wouldn't do it. We are probably between what the large public players do with their investment vehicles with public money and the normal pure private sector player. We are somewhere in between. We have, as a company, the mandate, or given ourselves the mandate, to promote development. But at the same time, we just do it primarily only with with private means, and I think this is a very special mix, which is relatively rare. I hope that more companies will follow. Of course, there are a few competitors, but still we need much more players, much more competition, which will then increase volumes, but also professionalism.
Where should the money come from? So should there be like pension funds or also just normal people investing it? So
That's a very important question. Our experience is that if something is pretty new, if there's a lot of question marks, which a normal investor then considers as a risk, typically those investors that have really a huge potential, which is pension funds and other institutional investors, they won't invest because there is no track record. So it is primarily the private individuals who tend to move in first. However, in today's regulatory environment, it is very difficult to talk and promote such products to just the general public, although it would be willing to invest. So there is a conflict of what would actually work and what is allowed. And we were lucky that quite some time back, so at the beginning, we managed to get public distribution for 2 funds, or for one, and now it's 2, and they get access really to, or give us access really to the retail client base, and that works well. And after 5-6 years, then pension funds move in because there's a track record, but before that's pretty difficult.
Most asset managers really struggled heavily during the financial crisis and from 2008 onwards. How did Responsibility challenge these hard times?
Well, we didn't have hard times then at all, because what we do is actually investments in the real economy and not through stock exchanges or other marketplaces. And one of the problems, I mean, there were several problems, but one of the problems for asset managers and investors back then and still today is that some of these marketplaces were just shut down. No one wanted to sell or buy a stock or shares or other securities. As we are not investing in listed securities, we do not face this problem. And as all our investments were pretty stable, so we never lost money, actually, during that crisis, a lot of investors discovered our investments, felt they are very stable, gave us more money. And so in the end, we had to stop accepting money,
Really?
Closed for a while some funds, not for those who wanted to leave, but those who wanted to give us money. So we actually experienced exactly the opposite, what most people experienced. We saw more inflows, and we didn't see any kind of negative influence or impact on the performances of our investments.
Great news. You just arrived at SensAbility this year. What are your expectations about the conference?
I think such conferences, they are very important because what they do, they open up people's minds and spirits. For those who are newcomers, sometimes it's the first time and they discover that, and often they are very fascinated. And for those who are maybe people who have come to this conference before or to others, it's a reinforcement, it's sort of a movement which gets stronger and stronger. And of course, all the debates about the different aspects of impact investment, I think they are important and valid, and are a contribution to advancing this very important movement.
Let's just shortly talk about the future. Where do you see the field of impact investing in 10 years from now?
Well, as the field is not just one field which is nicely defined, we might have to differentiate what kind of field. So the field we are in are development investments, so investments targeted at developing countries. And there, I mean, look, there's so many needs out there which can be translated into demand. And with today's technology, there's a lot of technological advance, with also the mindset we talked about. I believe that, and the growth that we observe in developing countries anyway, middle classes are emerging. I believe that there's a big potential for investments, and also a big hope to increase dramatically the impact of these investments. The other fields of impact investments, I think, are to some extent in a test phase. For instance, social impact bonds, I think is interesting from a conceptual point of view. However, how this really works and what the results will be and how they really can sustain, I think, is still open, but very interesting. And the other sectors, I believe, are also social entrepreneurship and venture philanthropy in the test phase. And then maybe one big part, which is community investments in the US, whether they spread out into the rest of the world, remains to be seen.
Mr. Tischhauser, thank you very much for the interview. It's a pleasure to have you here at SensAbility this year. Thank you very much.
Thank you.